Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Thursday, January the 26th, 2017. You're looking at a daily chart here of gold futures. Gold futures did manage to take out yesterday's lows, and we actually took out the trend line support, touching at the bottom of the Kumo cloud. Didn't break through it, but touched the bottom of it. At this point, you can see here on the weekly chart that the market did manage to also take out prior support. This is a bearish sign, and we could see continued downside picking up in the in the next week. However, there may be a slight pause in this. Let me show you what I'm talking about here. I don't think it's going to be a straight down drop. As you can see here, the market gapped up here, back and filled on the GLD, and then we managed to head lower on here, right? So let me show you another thing. If you look at the UGLD, a little bit better. You can see it here, what happened, okay? But then you look over here, look at the GDXJ on the weekly. You can see it's mellowing out, it's sideways. And this is a weekly chart of the GDXJ. It's just sideways. There's no momentum going down. It's acting as if it wants to break out, get on the ramp, and explode higher. That's the GDXJ. Take a look now at the JNUG. Alright, JNUG on the weekly, it's the same thing. It's stretching out, but we're not really seriously breaking down with any momentum, with any downside conviction. This leads me to believe that this is the next step up here is going to be around the $13 level for the JNUG, and then we'll try to get to the bottom of the Kumo cloud. All right, that's what the price action is suggestion. Take a look at the Dow. All right, and we hit a new contract high of 20,069, and in addition to that, it did it pretty much on pace to what we were suggesting that it would do. And this is on a weekly chart, by the way. Now, if you look at the daily chart, you see no evidence of this thing really running out of steam per se. All right, but when you flip over here and go to ticker symbol DIA on the weekly, we have some gappage that needs to be dealt with. All right, and that was back from here. This is on the January the 24th. So we have not back and filled this. And remember, like I always say, the equity side of things is better priced than the future side. So we gapped and we have not filled. So back and filling is eventually going to have to take place. That would pull us back down, and then that would cause this SDAO, ticker symbol SDAO, to pop, because what do we have? We have a gap here. See, the gap up on the DIA coincides with the gap down to the SDAO, which is supposed to. This is an inverse ETF, and it's a 3X ETF. So here we are hitting a new low on the daily in the SDAO. So this gap should be contended with as well. And I'm suggesting that as the futures possibly see a pause and a gradual breakdown, this should actually get a pop. And then we should hit this trend line resistance at $42.97, around $42, somewhere like that. So you're looking at a nice run up here from these lows. I'm not saying that the trend is over with. I'm just saying that this will be ready for a correction, just based on those moves that you see there. Taking a look at crude oil, As you can see here, crude oil did catch a bid today, just as I suggested that it would. It's it's in a still bullish configuration here, and we got ramps coming up, and it is moving with that. So pushing higher back to 55 and then the 56. We're on target for that. I think he wants to go to 60. All right, looking at what happened in the U.S. dollar. The U.S. dollar is being well defended right now. And you can see here, we're in the Kumo cloud of death, so price action can be quite choppy. But nonetheless, market really isn't breaking down with any conviction, no picking up of momentum. So I believe that it wants to pop back up too, as long as you're in that cloud there. So the markets are, there's really no conviction. They're just oscillating back and forth and moving sideways. Not a whole lot going on. We do have Chinese New Year coming up starting tomorrow and Saturday, so things could be very interesting. You're not going to have China influencing the price of the gold futures market. So with that, does that mean there's no one to defend the price and it's going to go down? Or does it mean that it's going to go up? You know, just because China's buying the physical doesn't mean they weren't selling the paper. So maybe prices will go up because they're not playing. They're not there. Who knows? Markets do what they do. As traders, our job is not to predict anything. Our job is to trade what we see and to profit therein. It's just that simple. So, with that said, tomorrow's Take Back Friday. You know what that means. So, be prepared and trade accordingly. And remember, bulls make money, bears make money, and pigs get slaughtered. So, remember to take what you can and give nothing back. And I'll see you over at pulsewavetrading.com. See you in the trading room. And we had several webinars this week that were awesome. And if you missed it, you have an opportunity to go to the Learning Center at the Learning Academy, and you can view those webinars at your convenience. So with that said, everyone have a great evening. Peace.